Members, good morning. Thank you for attending today's meeting, and I thank you for making me chairman of the subcommittee. This subcommittee will deal with a resolution by way of positive vetting. That is a resolution moved under the Loans Ordinance, which seeks to approve the government to raise the maximum amount of borrowings for the purposes of the Capital Works Reserve Fund to a sum not exceeding in total $500 billion or equivalent for the infrastructure bond program and the government sustainable bond program. Now, do we need to invite public views for the resolution? No. All right. If this can be dispensed with, we are not going to invite members of the public to write in to us. So there won't be an invitation on the LegCo's website. I will now invite the administration to walk us through the paper. We have with us Ms. Manda Chan, Deputy Secretary for Financial Services and the Treasury, Ms. Georgina Locke, Head of Market Development, Hong Kong, MA, Ms. Almas Leung, PAS for Financial Services and the Treasury, Mr. Justin To, PAS, and Ms. Alexandra Wong, Senior Treasury Accountant, as well as from the Department of Justice, Mr. Wallace Ng, Senior Assistant Law Draftman. So I will invite the Deputy Secretary to walk us through the paper with a PowerPoint. Thank you, Chairman. Members are invited to scrutinize the resolution to be moved by the administration, that is to raise the maximum borrowing of not exceeding $500 billion for the infrastructure bond program and government sustainable bond program. Now, in the next 5 minutes, I will brief members on this arrangement with the aid of a PowerPoint. The Financial Secretary announced 2 initiatives in the budget speech 2023-24 and 24-25. The infrastructure bond scheme would be set up to better enable the management of cash flow needs of major infrastructure projects and to benefit the public as early as possible. And the government will also further expand the scope of the government green bond program to cover sustainable financial projects so as to consolidate our status as a green and sustainable financial hub. And in this year's budget, the Financial Secretary has proposed increasing the borrowing ceiling to $500 billion under these 2 programs to allow flexibility for quota relocation. And according to the EFS, this can help develop the bond market and allow capital raised from the market to drive green and sustainable infrastructure projects. The proceeds from bond issuance will not be used for funding government recurrent expenditure. In the next 5 years, the government is going to issue bonds of about $95 to $135 billion per annum. And I will go through the details of these 2 bond programs with you. The first one is infrastructure bond program. As said just now, the purpose is to enable better management of the cash flow needs of major infrastructure projects, to facilitate early completion and improve people's livelihood. The projects include those under the Capital Works Reserve Fund, as well as other major infrastructure initiatives, such as the Northern Metropolis. The next program is Government Sustainable Bond Program. This is built on the success of the Government Green Bond Program. This program will further expand the scope to cover sustainable projects. It will be renamed as Government Sustainable Bond Program. Government green projects covered by the CWRF falling under the 9 eligible categories under the Green Bond Framework will be covered, namely renewable energy, energy efficiency and conservation, pollution prevention and control, waste management and resource recovery, water and wastewater management, nature conservation and biodiversity, clean transportation, green buildings and climate change adaptation. The concept of sustainable finance covers the financing of green projects and social projects. According to the latest International Capital Markets Association, the social projects refers to projects that can help address and mitigate a specific social issue and seek to achieve positive social outcomes for a target population. So these projects would include those related to education and healthcare, etc. Now, details of the issuance arrangements. Let's take a look at the arrangement in 2024-25 for the IPB and GSBP. According to this year's budget, $120 billion worth of bond under these two programs will be issued. There are two tranches. The first tranche is $70 billion of retail tranche, as well as $50 billion of institutional tranche. For the retail tranche, $50 billion issued as silver bond and $20 billion as retail bonds to raise the sense of participation among the community. As for the $50 billion institutional tranche, a certain portion will be earmarked for priority investment by the MPF schemes. All proceeds raised under the programs will be credited to the Capital Works Reserve Fund or CWRF, and the proceeds will not be used for funding government recurrent expenditure. In the next 5 years, as mentioned, in the 2024-25, $120 billion worth of bonds will be issued, and between 2024-25, 2028-29, as set out in the budget, the government plans to issue bonds about $95 billion to $135 billion per annum. And this means the ratio of government debt to GDP will be in the range of about 9 to 13% during the period. Now, as for oversight, the two bond programs will be overseen by a steering committee chaired by the Financial Secretary. The steering committee also comprises members of the Financial Services and Treasury Bureau, the EEB Development Bureau, as well as the Hong Kong MA. Will monitor the market conditions closely to decide the appropriate timing and parameters of issuance, and will take into account the actual market conditions at the time of arranging the bond issuance. In deciding the relevant parameters, it will also be submitted for approval by the steering committee. We invite the LegCo to approve a new resolution under the Loans Ordinance to authorize the government to borrow for the purposes of the CWRF sums not exceeding, in total, $500 billion or equivalent, being the maximum amount of all sums borrowed that may be outstanding by way of principal at any time under the two programs. The sums borrowed will be credited to the CWRF, and this resolution will replace the resolution passed by LegCo in July 2021 on the current maximum amount of borrowings of $200 billion for the government green bond program. I'll stop here. I welcome questions from members. Thank you, Deputy Secretary. 4 members have indicated their wish to speak. To allow sufficient time for members to put their questions, I will give each member 7 minutes. I'm sure there will be sufficient time, but please don't exceed the time limit. If you want to have another go, wait for another round. Mr. Dennis Leung. Thank you, Chairman. I support this resolution to approve the government to borrow up to $500 billion from $200 billion so that there will be sufficient funds to support the infrastructure projects in the future. On bond issuance, my question is on page 5. $50 billion will be the institutional tranche. And then there will be investment by the MPF schemes. That means MPF scheme members or employees in general will be able to make investment in the bonds as well. Now, the amount will be placed with the exchange fund, and then dividends will be, or interest will be paid out according to a fixed rate. For investors purchasing silver bonds, I-bonds, basically they get a return on the basis of a fixed rate, say in the form of an interest. But when it comes to MPF, the trustee may charge an administrative fee. And when you join an MPF scheme, you may need to pay a subscription fee. So that means additional costs on the part of employees. Whereas for other forms of purchase, the bonds will be purchased through a bank, for example, and then the subscriber will be able to receive exactly the amount of interest according to the fixed rate. I want to know whether the same goes for the MPF schemes or whether an administrative fee or extra cost will be involved. Can we avoid that? Or can we not, because of the design of the MPF and that there can be no interference? Yes. Thank you, Chairman. I thank Mr. Leung for his questions. For the institutional tranche, even if we don't give a certain portion to the MPF schemes for priority investment, the MPF schemes can still invest in these bonds. The Financial Secretary announced in the budget that MPF schemes will be allowed priority investment in these bonds to allow flexibility, but this is only an arrangement, is not a compulsory requirement. So that means we give priority to the MPF schemes in terms of investments in order to get a stable income. We don't mean to add on to the cost. I think what Mr. Leung has asked is that if you purchase bonds at the retail level, you don't need to pay extra. But if it's institutional bonds, you need to pay extra in the form of administrative fees. So I think his question is whether some discount will be given to the purchaser. Well, I think if a purchaser would like to buy bonds under the retail tranche, then there is no limitation. For the institutional tranche, as I said, this is just a portion earmarked for priority investment. It's not a mandatory requirement. All right, I get it. That means under the institutional tranche, priority investments will be allowed by institutions and MPF schemes. And scheme members will be able to get better returns. But you cannot stop any trustee from setting up a new mechanism under the MPF separate from other funds. So in terms of the MPF portfolio, this will be an additional element. Yes, the understanding is correct. Next, Mr. Robert Lee. My take on the infrastructure bond program and the government's sustainable bond program is this. The government has proposed to increase the maximum borrowing ceiling from $200 billion to $500 billion. I support the proposal. I think this is quite urgent, but I have a number of questions. For the government debt to GDP ratio, I think the government covered that in the presentation. Comparing to other countries, we are still very low. In Japan is over 200. In US is 100. Singapore and US is 100. And we're talking about 9 to 13% at most. So I say we're still in a very sound fiscal position, which should allow more bond issuances in the future. In fact, my sector and myself have always been advocating for more retail bond issuances to meet the demands of the market for stable income, and this can help diversify our investment portfolio as an international financial center. So this is a very good arrangement. Now my first question is this. We've just increased the borrowing ceiling from 100 to 200 not long ago. Now it will be raised from 200 to $500 billion. Will there be further changes? Are you going to further raise the maximum amount of borrowings? If so, when will it happen? Second question, picking up on Mr. Leung's question, I note that as far as the MPF is concerned, I think it is a good deed if they can diversify the portfolio as well to allow scheme members more investment choices. But at the moment, there is a problem with cost effectiveness. And according to the sector, there is a duplication of or overlapping of trustees, because the MPF schemes will only be able to invest in the bonds through setting up a fund or a trust fund. So this, whilst it is a good suggestion, the investor will need to first invest in the bonds and in a fund before investing in the bond. For MPF schemes, the administrative fees are in general pitched at 1.3%, and with a rate of return at about 4 to 5%, the administrative cost takes up quite a large proportion. So, can you address the overlapping issue? Two questions. As I said, $500 billion borrowing ceiling, whether it will be further raised. And the second question, and when? And the second question, how do you allow MPF schemes to directly participate in the investment?
Deputy Secretary. Thank you, Chairman. The proposed borrowing limit of $500 billion will cover the bond issuance needs for the coming 5 years. The level is set at $500 billion now. In 3 to 4 years' time, based on the market condition, when there are more needs in terms of infrastructure borrowing, we will raise the limit again. That will be a decision to be made by the steering committee chaired by the Financial Secretary. Previously, under the Green Bond Program, the limit was just $200 billion. Now, with the government's Sustainable Bond Program, we are raising it to $500 billion. So there is a room to raise the limit further. Now, concerning administrative fee or management fee of trustees, we will convey the message back to the MPFA so that under the earmark portion, there may be some adjustments in terms of management fee charged by trustees. Thank you. Now, the diversified investment portfolio of the MPF can be invested through multiple channels. Now, for the Hang Seng Index, it is already a channel for investors who participate in the market at a low cost. Now, if we are asking the trustees to track a certain index of fund, then there will be overlapping of management, and then the cost will be increased. So I applaud the idea to involve the MPF trustees in these products as well, but let's review the mechanism more. Thank you. Next, Ms. Carmen Kan. Thank you, Chairman. I speak in support of the resolution to raise the maximum amount of borrowings for the Infrastructure Bond Program and the Government Sustainable Bond Program. Previously called the Government's Green Bond Program, the scope has been expanded from just green programs to sustainable programs at large. The total borrowing amount is $500 billion. This can meet our future infrastructure needs, including the Northern Metropolis, and the government has pledged that the proceeds will not be credited for funding recurrent expenditures. This has catered the government's development needs, and with the promise to not use the proceeds to fund recurrent expenditure and also the low debt to GDP ratio, I support the proposal. Now, to reassure the public, I would like the Deputy Secretary to clarify. There is an outstanding principle of $194 billion at present, and the amount is to be due soon. So the $500 billion would cover the $194 billion outstanding. So there is some $306 billion remaining. So according to your PowerPoint, you would adjust the borrowing limits according to the market conditions. So what is the timetable you are thinking about? Second, on supervision or monitoring. There is not a breakdown in terms of percentage in the $500 billion bond to be issued. So besides flexibility, what are the considerations that you are not providing a breakdown for the loan? I think portions should be earmarked for usage in certain programs. Now, in terms of our goal to develop ourselves into an offshore RMB hub, does the HKMA have a plan to implement a program, a regular program in terms of bond issuance denominated in RMB, so that we can have more flexibility on our revenue curve? So of course, the proceeds should be used on programs under these two bond programs. Finally, I would like to know more about the approval procedures and how you are going to monitor the implementation of the programs. 4 questions, Deputy Secretary. Thank you, Chairman. First, Ms. Carmen Kan asked about the repayment schedule. As I said, for the next 5 years, the bond issuance scale will range from $95 billion to $135 billion. So that has taken into consideration the amounts to be repaid. So the total debt level accounts for 9 to 13% of our GDP, combining the repayments and the amounts to be borrowed. That is a low level. Concerning the maturity period of bond and the currency, it depends on the market condition. The HKMA will decide on these parameters. It also depends on the market's appetite. Concerning currencies, we will consider the preference of the investors. Over the past few years, we issued bonds in currencies welcomed by the investors: US dollars, euros, Hong Kong dollars, and even RMB. RMB accounts for some 20% of bonds issued in the past few years. In a moment, I will invite the HKMA to talk about the arrangements of issuance and repayment. The actual timetable would be decided by the steering committee, chaired by the FS and other government officials. Factors considered would include the interest rate, investors' preference, and the market's appetite. Now, before each tranche of issuance, roadshows will be conducted to explain to investors the arrangements of bond issuance and for gauging their appetite. HKMA, Ms. Georgina Locke. Thank you, Chairman. As Amanda said just now, when we arranged for the issuance, we would consider market conditions, including the tenure as well as the currency mix, also the investors' appetite. At the same time, we would consider long-term factors, including market developments and the government's policy objectives. On further enhancing Hong Kong's position as an offshore RMB hub, this is also a factor to be considered. We would dovetail with the government's policy objectives and offer a suitable currency mix. With a wider currency mix, it would help a lot in terms of catering for various demands and enhancing our attractiveness. So in future bond issuance, we will consider measures to help develop RMB as an international currency. So is it true that after the decision made by the steering committee, the bond issuance would begin immediately, or are there other procedures to go through? Now, our marketing team would consider the market window. So the parameters like tenure and currency will be decided by the steering committee, and then we will find the suitable window to issue the bonds. Now, concerning the supervision and monitoring of the bond programs, the paper only tells us that the steering committee and the HKMA would be responsible for it. But I want to know more. Is it the case that the steering committee would approve the parameters and then the HKMA would consider the timing based on the market situation? For tenure, be it 2, 5, or 10 years, would it be up to the HKMA to decide? And what about a regular bond program? At present, you are rolling out bond programs based on the market's needs. It is not a regular one. Now, if there is a regular program, you can choose to issue bond flexibly in different tenure. Now, there is not such a plan. Now, back at the meeting of the panel on financial services, I asked about that as well. So after the approval by the steering committee, what's next? So Ms. Carmen Can would like to know more about the arrangement. However, if you refer to the minutes of the subcommittee, and you will know the procedures. Deputy Secretary, can you supplement? Thank you. There are 3 steps. Before every tranche, the steering committee and the HKMA would look at the parameters like the tenure and the currency mix of the tranche, and then the steering committee would approve the parameters. After that, the HKMA would begin the preparation, for example, conducting roadshows to gauge the interest of investors. And having gauged the preferences and the appetites of the investors, the parameters would be finalized. And before that, before finalizing the tenure and the currency mix, the HKMA would seek the approval of the steering committee again before issuance. Now, as Ms. Carmen Can suggested, we will put this all in writing for members' benefit. Mrs. Regina Ip. We have some mega-scale infrastructure projects down the road, and it is inevitable to issue bonds to fund these projects. Now, for enhancing our capital market, it is also a good thing to issue more bonds. Like Mr. Robert Lee said, our debt to GDP ratio is just 9%, so compared with our neighbors, it is a low level. It will not affect our credit rating. So $95 billion to $135 billion for the next 5 years. This is purely for funding infrastructure projects. The process will not be used for funding recurrent expenditures. However, if you look at the government's estimates, you are also issuing bond for recurrent expenditures. The FS mentioned that $65 billion worth of bond were issued to cover the deficit. So combining the two, the size would be much larger. The account is clear on that.
方面嘅資訊。
好啊， DS, can you give us some idea on this point? Now, about the bond issuance in the coming 5 years, as mentioned by the Financial Secretary, we're going to issue bonds of about $95 to $135 billion per annum in the next 5 years. The government also has the government bond program. That is another program. So we also issue bonds under that program. The revenue is plowed back to the bond fund. And the Financial Secretary also mentioned in the budget that the IPB and the GSBP will eventually replace the government bond program. So for the total issue size, as the Financial Secretary explained, the range will go from $95 to $135 billion in the next 5 years per annum. Mrs. Regina Ip, please, your turn. I'm quite puzzled. Last year, the budget mentioned that in the coming 5 years, $65 billion worth of bonds will be issued to cover the deficits. Now, $70+ billion have been issued. And yet now you're suggesting that for $95 to $135 billion worth of bonds to be issued per annum in the next 5 years, they can cover the bonds previously proposed. I feel perplexed. Well, I don't have that white book with me, but I think the accounts are clearly set out there. Well, I think the question is for the bonds issued, some of them come under the estimates, some of them don't. And for the part we discussed today is not covered by the government estimates. And Mrs. Ip's question is, for the parts covered by the estimates, what is the issuance size? Right, clearly explained. Let me ask my colleague to take your question. Who will take this question, please? Senior Accountant, Ms. Wong. We exercise fiscal discipline very strictly, and the return of bond issuance will not be spent on will only be spent on public works and capital works, infrastructure works, and not recurrent government expenditure. But that white book, well, I don't have it with me, but that includes the bonds to be issued and the revenue covered in the estimates. Now, as I understand, there are two parts to bond issuances. For green bonds, it's not covered by the estimates. For other kinds of bonds, they do come under the government estimates, so they can be used to cover the deficits. So I think Mrs. Yip's question is clear. Say if I issue $60 billion worth of bond out of the $100 billion deficit, that means for the $60 billion worth plowed back to the government coffers, there would still be an outstanding of $40 billion in deficit. And I think Mrs. Yip is asking for the total, the size of bond issuance in the coming years. If you don't have the figures with you, please supplement the answer later. Give us a ballpark figure and the breakdown, the part to be included in the estimates and the part not included. Right. In fact, I can capture that page for your benefit. I stand to be corrected. Indeed, let me supplement. Financial Secretary announced last year that $65 billion worth of bonds were issued each year. And Financial Secretary was referring to green bonds as well as infrastructure bonds. So in fact, in the coming 5 years, we're going to issue $95 to $135 billion worth of bonds, in which the former is included. As for Mrs. Ip's question on the parts covered by the estimates, I will give this question to the Treasury and supplement this answer later. As I said in my opening remarks, the income from the $95 to $135 billion of bonds to be issued, they will not be used to cover the government recurring expenditure. That means you can't rule out the future issuances to cover the deficits, right? What's the government's position? This resolution proposes to raise the maximum amount of borrowings to $500 billion. This is not for covering the deficit. As for how the deficit should be addressed, we have a basket of measures such as zero growth of the civil service establishments and measures to cut spendings. And bond issuance is not the only tool to address the deficit. And in fact, as Financial Secretary mentioned, 2 years later we'll be able to strike the fiscal balance. And then 3 years down the road, there will be a balance in the consolidated accounts. So that means that we are not going to rely on bond issuance alone to address deficits. I do have another questions, but I'll wait for another round. I thank the DS for explaining that to me. Ms. Doreen Kong. Some questions for the two bond programs. For the government sustainable bond program, I understand that social projects will also be covered. There is a very broad scope. The projects cover infrastructure, healthcare, transportation, so on and so forth. So this seems to be quite similar to the projects we already have. So can you explain to me what social projects means? The other point is about the IBP. What should be the size of borrowing in the government's estimation to cover the cost of these infrastructure projects? Two questions, yes. Thank you, Chairman. Like Ms. Kong said, in fact, social projects are projects related to people's livelihood. According to the International Capital Market Association, latest guidelines have been issued. Now, according to the latest guidelines, social projects are projects which directly aim to address or mitigate certain issues targeting a particular population, such as addressing the population's need for drinking water. Whereas in Hong Kong, we also have projects to help improve people's livelihood, regardless of the scale of projects, such as healthcare facilities, school expansion, conversion, and other social welfare projects. They are all covered under this broad scope of social projects as we seek to address these livelihood issues for our population. Now, what should be the size of the infrastructure bond issuance to meet the needs? I'd say bond issuance is only one financing channel. We also have the infrastructure projects financing committee chaired by the financial secretary. An office has been set up, and they also looked into meeting the financing needs of infrastructure projects. There are also different ways to provide funding support, such as the build, operate, and transfer, as well as the topside development, railway development model, so on and so forth. And bond issuance is only one funding channel. It doesn't cover all the funding requirements of all the infrastructure projects. Now, of the $500 billion borrowing ceiling, how should it be apportioned between the IBP and GSBP? According to the Financial Secretary, flexibility will be adopted to facilitate quota reallocation. The principle is that any revenue coming from these two bond programs will be powered back to the Capital Works Reserve Fund. At the time of bond issuance, we'll consider the financing needs of projects in deciding which bond program to go for. And the steering committee will be in charge of approving these projects. I still have another question. We need to have the means to repay. For infrastructure projects and sustainable projects, they usually have a very long tenure. Now, taking into account the current economic outlook and the land sale revenue, will there be implications on our repayment capability? The government will issue bonds of $95 to $135 billion in the coming 5 years. The government has taken into account the repayment ability and other needs, as well as the interest rate. And having taken all these into account, the government debt to GDP ratio will range from 9 to 13%. As for other matters, they will be dealt with through other initiatives such as spending cuts, etc. So we've taken into account the government's repayment ability. Next, a non-member of this subcommittee, Mr. Bill Tang. Thank you, Chairman. Government bonds is an issue close to my heart. Many experts have commented on the sustainability of public coffers and government bonds. My understanding is that government bonds are a kind of investment for retailers, and in recent years we have had green bonds as well as inflation bonds. But according to surveys, many of these investors are veterans. They have already opened investment accounts, and they consider investment in bonds as good value. As for the middle-aged and retirees, many of them are not avid investors. With all good intentions, you'd like to provide them with a good investment tool to reap a stable income. But after all, these are people who are not well versed in investment. They are just ordinary citizens. So how do you combine? Is it coming through? Combine these two, that is bonds and MPF. Are you able to design a government bond that would provide stable income as a choice for MPF scheme members with government guarantee that there will be a stable return, so that for ordinary employees not well versed in investment, they will support you even if they don't know anything about investment, as long as there is government guarantee and good income. Because for the existing channel, bonds are usually subscribed through banks. I don't think this is being financially inclusive. Only experienced investors would buy bonds through banks. So we consider devising this kind of bonds. Right, I think other members already touched on this point. DS, would you like to explain this to members again? I think the member asked 2 questions. First, about the retail tranche of, say, I-bonds. Senior citizens may not be very familiar with I-bonds. In fact, we have the Investor Education Committee that focuses on public education. Like the member said, perhaps not all investors are familiar with bonds. We'll go back and discuss with the committee and see how we can enhance publicity. I'm sorry, please answer my question, DS. I'm asking how this can be incorporated under MPF.
Chairman, I'm moving on to MPF. In 2024 and 25, among the $120 billion $50 billion worth of bond will be issued for institutional investors, and some parts will be earmarked for MPF trustees. The arrangement is so that employees who are MPF accounts holder can enjoy steady return from their investment. So concerning MPF schemes management fees, that's another issue. Deputy Secretary, you have promised to convey our message to the relevant authority, that is the MPFA. Since a portion of the bonds to be issued will be earmarked for MPF trustees for investments, will you require them to adjust the management fee to transfer the benefits on investors? So please convey the message to the MPFA. Mrs. Regina Ip. My question was covered by Ms. Doreen Kong on social projects. What kind of social projects is in your mind? Do light public housing count as social projects in accordance with the standards set by the International Capital Markets Association? You are targeting a group of people, that is, people who dwell in subdivided units, and you seek to improve their living standard. Deputy Secretary, yes, according to the international definition, housing needs is also a social need. So that counts towards social projects. Specifically speaking, what projects constitute social sustainability projects depend on the actual circumstances. But yes, the scope covers light public housing projects. I'm not opposed to the idea of social projects, but I think you should have some kinds of projects in mind when you talk about social projects. Deputy Secretary. Mrs. Regina Ip is right. When we included social projects as part of our sustainability projects, we already had in mind some projects which should be funded by the program. Healthcare programs, construction of school premises, or even public transport, these count towards social projects. Specifically speaking, what kind of projects would be benefited from the bond issuance programs will be decided by the steering committee. I think the Deputy Secretary means that you are not at liberty to announce what these projects are yet, but the scope will definitely cover these projects. Yes, the program covers infrastructure projects, green projects, and social projects. So all these programs are covered by the CWRF. There are capital works projects, and there are green projects, and there are social projects. But the categorization depends on the actual circumstances when the bonds are issued and also the funding needs. At present, we don't have a detailed list of what programs fall under these three categories, but they are all covered. Now about the arrangements and the procedures. When you issue green sustainability bonds, there should be ESG standards to fulfill, and there should be a set of auditing procedures. So there are international organizations which would certify whether our projects align with the international standards. Otherwise, no one would invest in them. Mrs. Regina Ip is correct. For green bond, every year we would submit a green bond report. Take last year as an example. What kind of programs fall under the categories of the 9 areas? That would be in accordance with the international standards. We are not the one to decide. There must be a third-party which audits their contents. Now, at present, it is the quality assurance or the HCase QAA, which audits these programs. For example, CDF under the International Climate Change Framework, and also the Green Bond standards, ISO 2600 social responsibility guidelines, and so on. These are all international. These are all the international guidelines that we compare our projects with, to ensure that the green programs under our programs are really up to international investors' standard. If I may, a brief question. The FTU members ask about the MPF earmark portion. I understand what the government is thinking. You want to give a head start to the MPF trustees. These are bonds with stable returns, so you would rather the trustees invest in these programs rather than lavishing the contribution on risky projects. Now, I submitted a written question. There are 17 seed funds, like the government scholarship fund. The expenditure is met by the interest return. Now, the safest way is to park the fund with the HKMA, because there is an agreement to offer a return at the rate of a 6 years average. Another way is to place the fund with banks and receive interest. Well, but from what I see, all the funds which are making money are not from locally. Now, there are foreign fund managers coming to Hong Kong to share the know-how. So they are also stakeholders. So why are all our trustees investing in local, in foreign funds? Because in Malaysia and other jurisdictions, there are requirements for the retirement scheme trustees to invest in local funds with priority. So why don't we require the MPF trustees to do the same? As Mrs. Regina Ip said, the earmark portion for MPF scheme is to ensure that employees can get a reasonable return from their MPF contribution. So whether priority arrangements would be offered to local fund managers as well to ensure developments of the local fund market, we will convey the message to the steering committee for consideration. Thank you. I think officials in charge of our investments, for example, the Treasury or the HKMA, are too fond of investing in foreign funds. They always invest in the same funds, and it is not fair for our local funds. Thank you, Ms. Carmen Kan. The purpose of this subcommittee is to offer an opportunity for the government to explain why we are raising the borrowing limits under the loans ordinance. The paper is 5-page thin. That's why we are asking so many questions. Back as the panel on financial services, as mentioned by the chairman, we offer some suggestions to the government. For example, why there is not a breakdown, and also the administrative structure of the two bond programs and how the proceeds will be used. So my question just now was on how we can supervise the bond issuance process. So for the $194 billion outstanding, the tenures and the due dates are different. So can you tell us, Deputy Secretary, the repayments timetable for the $194 billion, because there would be a doubt on whether you are refinancing the outstanding amount with the new amount issued for 2024 and 25. So let's not wait for the annual report. Riding on this opportunity, and since we're talking about this important issue of raising the borrowing limit, can you give us a list of the due dates of the previous tranches of bond issued? And second, how you are using the proceeds. Before bond issuance, of course, you would set out the scope of the programs. But what about the supervision when the proceeds are actually allocated to the programs? Now, the $500 billion will be credited to the CWRF. So the CWRF has much more fund than $500 billion. So what is the current position of this CWRF? So the scope of the programs include green projects, infrastructure, and social sustainability projects. Now, CWRF can be used to fund minor works, projects, and other projects which do not fall within the three categories. So after crediting the proceeds into the CWRF, I want to know that there is a mechanism to ensure that the proceeds would be spent on the three approved categories. I want to know that there is a mechanism to do so. Now, about the role played by the office for funding major infrastructure projects, is my understanding correct? The Financial Secretary chairs two commissions. That is the Project Financing Committee and also the Steering Committee for the bond programs. So the members comprise the HAMA, the EEB, and the Development Bureau, and the FSTB. So for the Project Financing Committee, the membership is much wider. And besides bond issuance, there are other ways to meet our infrastructure funding need. So there shouldn't be a misconception that all our infrastructure projects in the future will be funded by bond issuance. 4 questions, Deputy Secretary. For the next 5 financial years, up to 2028 to 2029, the bond issuance of $95 billion to $135 billion, that is our revenue and also our repayment schedule. Now, Mrs. Regina Ip mentioned the white book, so that is all included in the white book. My question is about the payment schedule for the $194 billion outstanding. So let me talk about the figures. 2024 and 25, you mentioned that I mentioned there would be a $120 billion issued. At the same year, the amounts to be repaid by the government will be some $2.42 billion. Now, by 2026, the amounts to be repaid is some $448 million. So the proceeds from future tranches of bond issuance will not be used on repayment. They will be spent on the approved programs. Concerning how we are going to monitor the use of the proceeds, first of all the proceeds will be used for funding programs under the CWRF, and all such programs require the approval of the Finance Committee. So there is a layer of oversight at the electrical level. And also the steering committee chaired by the FS would scrutinize the parameters of the programs carefully to make sure that all the programs are beneficial to society as a whole. So there is also another layer of internal oversight. The Development Bureau is invited to the steering committee as well because we have an infrastructure bond program. The Development Bureau understands the funding needs for major infrastructure projects best. Concerning the current commitments of the CWRF, as at the end of March this year, the outstanding commitment is some $632.5 billion. So that's the total commitments borne by the CWRF.
第一條咧，關於
Now about the outstanding commitment, 194 billion. I mean, that's the outstanding amount unpaid. Ms. Regina Ip would like to have a table about the different tenures of and the various maturity dates of the bond tranches. So can you give us this table? So for the amount outstanding yet to be repaid, can you give us the third supplementary paper for our benefit? Let me walk you through the details. We issued bonds with tenures ranging from 2 to 30 years. So let me give you the rough breakdown. 60% with tenure 1 to 5 years, and 6 to 10 years 30%, and then 8% with 10 years of tenure or more. So for the shorter term tenures of 1 to 5 years, that is basically the focus. When we plan for future bond issuances, we will strive to achieve a better balance to spread the tenures more evenly. Well, I thank you for your explanation, but I do look forward to a written paper to tell us more about the debt position and the oversight. In fact, the administration addressed my concerns. We will issue $120 billion worth of bonds in 2024-25. This is the maximum, right? You will have regard to the market condition, the interest environment, and then in 2024, $24 billion will be used for refinancing. What about 2025 and 2026? $448 million, right? I want to let the public understand which part relates to refinancing and which part relates to the developments. Right, would the administration please give us supplementary information later? Mr. Robert Lee. We've been discussing the issuance of bonds, but I think we need to talk about what happens afterwards, such as clearing and settlement, trading, and the relevant data. What are the channels available for the public to know more about these things? Have you been talking to the security sector? Take silver bond as an example. In its early days, when the securities firms were unable to take part in the subscription, it was not widely publicized. Have you talked to the Hong Kong Exchange? Because the purpose of bond issuance is to bring vibrancy to the market and to boost liquidity, as well as meeting the financing needs of infrastructure projects. These firms will naturally help publicize the bonds in order to get more business. They'll be happy to help out. And this is also one way to educate investors. Say for the Hong Kong Exchange, it provides a trading platform. All the prices are, or price information is available, and it will appeal to global investors as well. So I want to know whether you've been talking to the stakeholders on the later parts of bond issuance, such as clearing, settlement, etc. Yes, all bonds will be listed on Hong Kong Exchange for in the secondary market trading. We liaise closely with the Hong Kong Exchange. This is a very important step. After all, you ask whether we will step up effort in this regard so that investors interested in government bonds will be able to trade government bonds through Hong Kong Exchange. As for clearing, settlement, and data collection, now the infrastructure bond program and the government green program will be expanded to become the government sustainable bond program. Every year, an annual report will be issued for the benefits of investors so that they know what projects have been included in the programs. I'll see if Ms. Locke would like to supplement on investment arrangements. For retail green bonds, secondary tradings are available through Hong Kong Exchange. Well, whilst it may not be very active, it's after all up to investors to decide whether to trade in the secondary market. As for bond issuance, it's mostly for primary trading in line with international practices. Next, Mrs. Regina Ip. Thank you, Chairman. Another question on operational issues. Is the Hong Kong MA the issuer of government bonds? The Hong Kong MA has been a major player. So they act on the part of the government. But the investment strategy is totally different from that for exchange fund also managed by the Hong Kong MA, right? The purpose of exchange fund is to maintain the value of Hong Kong dollars. And for the government bonds, there is a separate investment strategy. Is that right? The investment strategy of exchange fund vis-a-vis government placement, government bonds, these are two separate things. They are managed by two different teams. So setting aside the various seed funds parked with the Hong Kong MA, such as Hong Kong IC, some $60 billion, well, it's been established for 2 years. I haven't seen any projects or I&T projects approved under Hong Kong IC. And it's parked at the Hong Kong Exchange Fund, and this is supposed to be different from the purpose of Exchange Fund to maintain the stability of Hong Kong dollar. There is no separate strategy for the funds parked at the Exchange Fund. The Exchange Fund has its own investment strategy. The return of the funds parked with the Exchange Fund is based on the rate of return. Yes, I understand how this goes back to the public coffers, but I think that there should be a separate investment strategy, because if this is in place to safeguard the exchange rate, then it's after all very highly liquid. You may need to absorb a lot of risks in order to stabilize the exchange rate. For example, you won't buy high risk shares such as Evergrande. Yes, exchange fund is set up to protect the linked exchange rate. So as for the Hong Kong IC, Hong Kong Investment Corporation, this is a wholly owned subsidiary with a special purpose to invest in entities in the Hong Kong nexus. That is, to invest in projects conducive to the development of our economy and the innovation technology sector in Hong Kong. It's for the Hong Kong IC's management to consider how they should publicize their investment strategy for the benefit of the public. You mentioned the three entities. These entities have separate investment strategies. They have no direct relationship with one another, however. My question next is on the interest to be paid out for the bond issuances. The steering committee is tasked to oversee this matter, taking into account the market condition, etc. Is there a ballpark figure as to how much we're going to have to pay out? Well, one important consideration is the interest rate. This is one important cost factor. We are in a high interest environment at the moment. But gauging from previous figures, our estimation is roughly 3.1%. And we believe that in the coming years, the estimates will be prepared on this basis. That is in relation to the interest payment.
Yes, Director Ms. Georgina Locke. In terms of the interest rate for U.S. sovereignty bond, we would look at the U.S. Treasury. And we would discuss with other banks. And we will include a spread above the benchmark. And we will try to make sure that the spread is within the reasonable range for cost control. Sorry, the speaker is not coming through the mic. Yes, in terms of the interest payment for bond, who will bear it? Now, all the expenditure, including interest from the infrastructure bond program and the government sustainable bond program, this would all be paid by the CWRF. If there are no further questions, on the last occasion, as the panel of financial services, for two tranches of green bonds, they were issued in a tokenized manner, $800 million and $6 billion. Now we still have some $120 billion worth of bonds to be issued. Now, tokenization of bond issuance is important for attracting foreign investors as well as consolidating our position as an international financial center. So I hope that you would continue to pay attention to the tokenized issuance of bond because this is the international trend. Now I propose to go through the clause-by-clause scrutiny. Now let's look at the Chinese version of the resolution, and then I will invite the legal advisor to check the English version. Deputy Secretary, please. I will invite my colleague, Mr. To, to do this. Yes, PAS, Mr. To, please. I refer you to the Council brief. You can find the text there. Now, the resolution itself is very simple. In 2022, we also proposed a resolution for issuance of green bond. The framework is the same. It is just that the ceiling is different. Now it has become $500 billion. And also, the resolution would replace the resolution passed in 2021. So the effective date would be replaced by a new one. Now, you may be interested in the explanatory note because that sets out the details about the infrastructure bond program and the government's green bond program. Now, we adopt the same spirit as in 2021. For infrastructure bond and sustainable bond, we think the definition would be better placed under explanatory note. For the resolution itself, we try to make it as simple as possible. So we are now just saying that we are allowing the government to borrow money and credits into the CWRF. Legal advisor, thank you. We have checked the Chinese and English text. They are synchronized. And also we have inquired the government on certain issues concerning the proposed resolution. The reply is set out in LS 18/2024. That's the Legal Service Division report. We have no follow-up questions on the government's reply. Thank you. Now I open the floor for questions. Mrs. Regina Ip. I have no comments on the wordings. Now under Cap 1, what kind of resolution does it fall into? I will attempt the question and I will seek supplements from the DOJ. Now this is a positive vetting process. That's why we have a subcommittee. If it is approved by the subcommittee, then upon checking by the LSD and also reporting to the House Committee, the Secretary would move a resolution on the Council. But there is also subcommittee for negative vetting procedures. Yes, sorry, my mistake, but this is just the positive vetting procedure. Ms. Carmen Can. Thank you, Chairman. I thank the administration for confirming some of my questions. I was going to ask about the differences between this resolution and the old resolution. Now, basically, we are replacing $200 billion with $500 billion, and C, the dates of the resolution to be replaced will be amended. And also for the sake of the public, now this is not very often the government would propose raising the borrowing ceiling. So I seek some clarification for the explanatory notes. This carries no legal effect, but it helps readers understand the resolution. So according to the explanatory note, the government is establishing a new infrastructure bond program, and B, you are expanding the scope of the government's green bond program as well as renaming it as the government sustainable bond program to cover sustainable projects. Now, the legal advisor confirmed with the administration that there is not a breakdown between the two. So this carries no legal effect, right? Mr. Ng. Thank you, Chairman, and thank you, Ms. Carmen Khan. You are correct. Explanatory note itself is not part of the resolution, but it helps readers to understand the intention behind the resolution. So that's the effect. It does not carry any legal effects, though. Sorry, the speaker is not coming through the mic. Sorry, the microphone is off. Sorry, the speaker is not coming through the mic. The microphone is off. Now, concerning the usage of the proceeds from bond issuance, you can find the purpose here. The proceeds would be credited to the CWRF. Now, the DS mentioned that there is some $600 billion worth of commitments bond by the CWRF. Now, the ceiling is $500 billion for future bond issuance. Now, the public should understand that all these will be credited into the CWRF, and then the usage of the fund will have to be approved by the Finance Committee and also supervised by the Steering Committee. So this is very clear according to the resolution. Now, the word "from time to time," this provides the administration flexibility to take into account factors like interest rates, market condition, and also infrastructure needs. Now, the word from borrow from any person, it means that we can borrow or issue bond to a retail or institutional investors. Now, borrow from any person means retail tranche and institutional tranche both works. It is also opened to MPF trustees. Now, the sum not exceeding in total $500 billion or equivalent. Now, with the term or equivalent, you can also issue bond denominated in RMB. So this would help developing Hong Kong as an offshore RMB market, and also for tokenized issuance of bond. So these are also the wordings of the resolution. So is my understanding correct? With these wordings, you can achieve what you seek to do. After all, this is a positive vetting process. So I just want to confirm that by replacing $200 billion with $500 billion, you can achieve what you set out to do. Mr. To? Yes, those were our intention. And also, under the Green Bond Program, we are issuing bond in various currencies to various investors. So we are adopting the same set of wordings to ensure consistency. Chairman, my next question. This is the ceiling of the principal. Now, if we approve the principal amount here, what about interest payments and expenditure? According to the DS, that would be paid for under the public works account. So where does the authority come from? Now, this resolution is made under Section 3.1 of the Loans Ordinance Cap 61. So under the ordinance, the powers concerning payment making by the government is set out. So the power stems from that section of the ordinance. Mr. Ng. Thank you, Ms. Khan. This is a resolution made under Section 3(1) of Cap 61. According to that section, the government can borrow a sum from any person under such conditions negotiated between the government and the person, and the purposes of the process must be approved by the Legislative Council. On repayment, the power doesn't stem from the same section. However, the basis for making use of the CWRF to pay for the interest payments, that may stem from another ordinance. So we will supplement the answer after the meeting. Sorry, the speaker is not coming through the mic. Concerning the power to pay for the interest, is the government empowered by the loans ordinance to make those payments? So I have no other question. If there is no other question, the scrutiny work ends here. Concerning the resolution, the government has withdrawn the relevance notice. We have completed the scrutiny work today. The government can, in accordance with Rules of Procedures 29(1), make new notice concerning the resolution to the Secretariat. So is the government prepared to move the resolution as the Council on the 8th of May? If so, the government must give a notice no less than 12 days before, that is the 22nd of April. Now, if there are no other comments, I will report the work of this subcommittee to the House Committee verbally on the 12th of April. Concerning the proposed resolutions notice limit, the deadline will be the 30th of April this year. Any other matters? If not, the meeting is adjourned. Thank you for your attendance, and thank you, administration, for attending. So concerning the supplement information, please submit them to the Secretariat after the meeting. Thank you.